Hello, I'm Congressman Brad Sherman from California's best named city, Sherman Oaks. I've served in the House for 24 years and for 24 years on the Financial Services Committee. And I've been a loud advocate for member-owned, nonprofit, tax-exempt depository institutions. In a word, credit unions. I want to thank CUNA for its advocacy. I want to recognize again Ryan Donovan, who worked for me for so many years, so long ago. And I also want to recognize your chief advocate, Jeremy Impole, who represents California credit unions and also worked with me almost as many years ago. Over the past year, we've confronted a historic emergency. But throughout it all, credit unions have been on the front lines, supporting their members and their communities. Early in the pandemic, we saw individuals' need to access their savings account become more urgent in some cases. Federal Reserve regulations previously limited certain withdrawals to only 6 transactions a month. On April 8th of last year, I urged Chairman Powell to temporarily ease those limits on credit unions and others, and less than 3 weeks later, the Fed responded by removing withdrawal caps during the crisis. Last April, I continued my efforts to support credit unions by introducing the Access to Credit for Small Business Impacted by COVID-19 Crisis Act, which had 31 Democratic and Republican co-sponsors. This legislation is intended to temporarily exempt certain small business loans from the cap on credit union business lending. And a second provision of that bill provided for a 1-year extension of the enhancements made to the Central Liquidity Facility designed to help support credit unions through the pandemic. I'm pleased to report that this second provision was included in the COVID bill that was passed and became law in December. On GSE reform, I think it's critical that we continue to make available fixed rate 30-year mortgages. The only way we can do that is if we have a federal guarantee that's available on a fair basis, whether the loan is originated by a large financial institution or a smaller institution. Also, I never miss an opportunity to tell the CFPB that we put Section 1022 of Dodd-Frank in there for a reason. It gives the CFPB the authority to modify regulations or issue exemptions so that the regulations apply differently or not at all to smaller financial institutions. One size does not fit all. Regulations are not socks. Let me close by saying you come to Washington and you may feel, well, you don't have the clout of the giant banks and financial institutions in their packs, but let me tell you something. When you go to members' offices year after year, and I'm sure you'll be going next year, if not this year, they'll pose for a picture with you because they want to put it on Twitter and Facebook. They want to be in your newsletters. Few of my colleagues ever take a picture with executives from big banks and put that up on their Facebook page. You will continue to be popular with members of Congress as long as you're popular and as long as you keep serving the members of your credit union. I'm Brad Sherman. Thank you very much.